All right, guys, we got Angelo here with us today. I just gave you a long-winded intro. Angelo, welcome.
Hey man, how are you?
Good, good. Just got to tell our folks a little bit about
Yeah,
your background. Can you give me the high-level stuff, and then we can get into the goods?
yeah, absolutely. So, my name is Angelo Christian, and I own a nationwide commercial residential lending company. We've been in business for over 2 decades. We do all different types of funding projects, everything from, multifamily, land loans, HELOCs, ground up construction, conventional. And so, our commitment is to help our customers to change their lives, grow and add value, and just really do whatever it takes to help our client, to get the funding, to get the capital. So we're the type of lender that's solution oriented. So we come up with multiple options where a lot of lenders, if you don't meet the criteria, they'll deny you. We want to come up with a way how to make it happen, how to get the funding, and really work with our customer to guide them and structure the loan. So that's what we're famous for.
Yep.
So a lot of people call us in the ninth hour, they need funding. Their other lender bailed them. They couldn't get it done. They call Angelo Christian, or it's a very large loan. For let's just say an RV park, and it needs multiple syndications of capital. We come in and put the whole deal together with all the banks. So we're known as kind of the white knight of lending, and so
Nice.
and we're proud of that, and that's our business model, our niche. So we have a very good track record. You can look us up online. We have a lot of happy customers. You can see our Google reviews, and so yeah, we're here to serve, man.
Well, so that's why I wanted to have you on the show. It's New Year time, and there's been so much change, and you've seen so much, and you've helped so many people, and you've done, I don't know, thousands or however, many transactions. It's a weird time, right? Let's get right into it. What's going on with your clientele? I'm sure you have some really seasoned folks that you've worked with. How are folks in your circle?
Yeah, so there's been some markets, like you said, that have been drastically affected. For example, first time buyer. The second quarter of 2022 and onward. When we started to see the Fed raising rates and getting very aggressive with that, first time buyers and investors for DSCR type loans, or investor cash flow properties, that market really got killed because if a rate goes from 4% to 7%, that first time buyer is not going to qualify for the loan with their debt ratio, and then investors don't want to do deals because the debt service doesn't make any sense. And so
Right.
those
Pigeonhole.
markets, huh?
Pigeonholed.
Yeah, it really, because we had probably several hundred loans in processing, and 50% of them canceled because
Yeah.
they you saw rates go from here to here in 3 months, and so that we took a bath in that. I mean, I'm not going to kid you, man. It was rough
Appreciate it.
dealing with that.
Yeah, I'm sure.
And but what one of the things that's very interesting, that because I've been in the business a long time, I wanted to create a very wide product offering, be very diversified with the products that we offer. So what really stayed afloat was commercial lending, and then also private lending.
Mhm.
So those are the two silos or prongs of revenue and business that kept us to sustain in 2022. A lot of mortgage companies shut down last year.
Y
You
Yeah,
know,
we gotta stick on this for a minute because I was gonna say that some people could not withstand this. You've been around for a pretty long time. You've been through cycles, and, so yeah, it's good to talk about the folks that were getting loans in that period. Can you tell me some of the projects, maybe some of the
yeah,
areas?
yeah. So what was really working well for us was very large, let's just say senior living,
Mhm.
RV parks, mobile home parks, very large institutions that were deploying capital, very large funds that wanted to invest, their family offices, and these loans are usually 10 million plus,
Mhm.
up to $100 million. Large mixed use developments, Florida, Texas, the Carolinas,
Yeah.
Tennessee is very hot right now. Tennessee is very hot. Some parts of California. So, and then in addition to that, the private lending, which has really taken off in the last decade.
Mhm.
So people are, they're opting towards dealing with a private lender versus a bank because of speed to capital.
Right.
And you do pay a little bit more, but like I have customers that, that are worth several $100 million, and they'd rather do a private loan and pay a higher interest, not to deal with the nonsense of a bank. And
Yep.
you never think that someone of their stature would ever do a private loan, but when you see their REO schedule and you see how much money they're making, they don't care because they're focused on the ROI and the bigger piece of the pie. And so those are the two
Love
things
it.
that really helped us sustain, in 2022. Now going into this year, oh, do you have thoughts?
Yeah, yeah, yeah. Just, those are the guys that were smart in that time period. They didn't stop growing, and they are probably doing more now that they stuck through that with you.
Yeah, I mean, usually, I mean, this. I mean, Warren Buffett talks about it when there's blood on the streets, buy. And what you saw was real estate prices coming down. These guys were getting deals. You've seen what happened to lumber right now, and so they're going to jump in when the price is right. And a lot of the loans they did were variable rates. So if rates go down this year, they're going to take advantage of that too.
Right.
So they're a lot of these big loans, these CMBS loans, and these very large loans, they usually have some type of adjustable feature where if rates do go down, they're going to reap those benefits, and that is our expectations that rates will slowly start to trend back down this year. So
Love
we'll
it.
see what happens.
Yeah, well, let's get into that. Like right now, today, are people better than they were over the past 12 months? Are they worse? Are they like adjusting and you're seeing more or less activity?
I mean, on the so far, I mean, start this year, residential has picked up. I don't know if you saw in the Wall Street Journal this morning, they said it's 18% increase in mortgage applications.
Wow.
And we're seeing that too, because, you know, let's just say from October of 2022, a 30-year fix was at 7%. Now you can get it at a 5.5% right now. So more people are stepping up to the market to buy, and home prices are still lower.
Mhm.
I think people, if they time it right, they can get the rate at the right, level, and then they can get the price at the right level because they've dropped about 10, 15%. They'll be justified to do the deal.
Yeah.
So and that's what we're seeing.
Time to strike.
It can, yeah, it is for residential. I think my hope is that this year that I think rates, if they stay in the 4 or 5% handle,
Mhm.
it's healthy for the economy, be good for inflation,
Yep.
and more people will want to do investor deals. They'll want to do first time buyer, all of these things,
Yeah.
and it'll help our market to keep growing.
So what about commercial and multifamily stuff
Yeah,
happening?
yeah. I mean, so like I said, in 2022, that um, was one of our. I mean, we looked at obviously the areas that had the highest revenue, and that was our second highest revenue stream was commercial, multifamily, and a lot of ground up construction.
Mhm.
A lot of what we're seeing is like investors, they didn't want to do. Well, you have a few things. You have more money chasing that, and there's less of it that's already built. So now you're seeing a lot of developers doing ground up construction, like on 200, 300, 400 units, and so the cost basis is lower. And then once they are done with the project, they can refinance to a lower rate.
Yep.
So we saw a lot more activity with ground up construction,
That's awesome.
for multifamily, for, like I said, RV parks and mobile home parks. We saw a lot of in 2022.
Yep.
And what we're seeing is, like, for example, the RV parks. If you think about it, you have the baby boomers that are retiring. They're buying these big RVs and they're traveling all around the world, all around the
Hmm,
country.
that's neat.
And
Never thought of that.
well, the only reason I know about this is one of my business partners. He does that. He bought $1 million RV.
Nice.
I mean, he's traveling all over the country. He's 70 years old,
That's
and
awesome.
and I'm seeing where he parks his car, and it's $300 a month to use the little thing, and
Right.
there's 600 RVs over there parked, and you start to do the numbers about the ROI, and it's pretty much just all land and with a little pool,
Yeah.
the community park, and you start to think, man, this thing's actually, it's a cash flow generator.
I love you sharing that. I mean, I've had a couple folks specifically in the RV business. It's really cool to hear about how they're turning them into like destination,
Yeah,
adding more amenities and this and
right.
but it's also very cool to hear that it didn't stop and it's growing um still. How about the future? Can we get some crystal ball stuff?
Yeah, yeah. I mean, man, my guess. Uh, I don't know if it's how good.
Give it to me.
I don't know how good it's going to be, but I'm more of an optimist, and I've always been historically, and I guess I need to probably sprinkle in some realism in there, and I hope and believe that the market will stabilize this year. That rates will come down slowly, and that I think it's going to be. I know there's a lot of bad press out there. That it's going to be doom and gloom, recession.
Mm.
I don't see that. I don't think it's going to be a gangbuster year either. But I think it's going to be. I'm speaking real estate, mortgage related, and when I'm talking, I think it's going to be better than 2022. Um, but and I think there's going to be somewhat of a rebound. I think home prices can come back a little bit, but
Mhm.
I think there's going to be more consumers stepping up to the plate to get funding this year, and that's what we've seen already. At the start of January.
Yeah.
So I just want it to sustain and stay like that for the rest of the year.
And you got a little bit of a like a hedge period. If you're getting more applications, that means next month there's properties going under contract. The
Right.
following month they're closing, and um, yeah. Thanks for that.
Mhm.
How about with being in so many different states, and there's regulations or this or other pieces. How do you manage that with such a large company, just coordinate it.
Well, I mean, obviously, you have to have the infrastructure, right? The management, the operations. I can't. I don't do it all. I'm not smart enough to do all. And I'm only one person. So, having people in place in the right departments, with compliance, with operations, processing, underwriting. And one of the things that we saw in 2022 was because so many mortgage companies were laying off and downsizing or shutting down, it left a lot of great candidates to bring on board.
Hmm,
We were
that's
actually
interesting.
doing the opposite. We didn't lay anybody off. We were hiring.
Wow,
We got really good people to bring onto the team. Some of our biggest competitors shut down last year, and it gave us an opportunity to bring in some great talent.
that's very, very cool.
Yeah.
So, how do you stay motivated? Friends, family, kids?
Yeah, man. I mean, so for me, it's my obviously my family. I'm married. I've been married for 20 years. I got three children,
Oh, congrats. How
and
old?
16, 12, and 10. And
Old.
yeah, I'm getting old. I'm 42.
Okay.
So
We're the same age. Mine are 7 and 9. I'm
oh wow,
lucky.
okay, okay. Yeah, so having them grow up and having them become adults and seeing helping seeing my daughter walk down the altar and the aisle, and my
Yeah,
son graduate. He wants to be a baseball player. Hopefully, he gets there, and being part of those moments, helping my team grow. I'm really big about my team and having them grow,
sure.
and changing their lives. So that's a big thing for me. So that helps to motivate. And then my customers. I mean, solving people's problems.
Mhm.
You get a call, hey, I got a problem here. Can you help me fix it?
Yeah.
I feel good when I help somebody. And
It's gotta be a big thing on that private lending side that you were saying because there's just there's so many people so many people out there that are willing to put money in a secure bet, and I think there's way more now than there ever has been. You said you have some folks that have hundreds of millions of dollars. It's hard to find folks like that, but it might be getting a tweak easier for you.
Well, yeah, once you build a track record. So the thing on the securitization side, um, when you have banks paying 2%, 3%, 1% on a CD, and on the securitization side, these loans, they end up being bought by an investor, and those yields can be 9 to 13%. It's a
Hang
no-brainer
on,
for
I
them
just
because it's
lost you
backed by
for a
real
second.
estate at 50.
Uh, it's really choppy right
Okay,
now.
no problem. Can you hear me now?
Yeah, you're delayed, but it was just there. You wanna rewind and
Yeah, yeah, yeah. So the thing with what from the investor standpoint, when these loans go into securitization, the private loans get bought by an investor. And when we first started, it was harder to get investors to buy our notes because they didn't know who we were. And now it's the momentum is built on. And so what they look at is risk and then obviously the reward. And these private notes, they pay anywhere from 9 to 13%.
yeah.
So, and the LTV on the collateral is usually 50 to 60%.
Oh, wow.
To them, it's a no-brainer
Sure.
because it's first trust deed. And the way that we structure our loans, the investors are pretty much, I'm not going to say completely risk-free, but they have minimal risk. And they compare that to, well, the stock market, or they compare that to, getting putting their money in a CD and getting 2 or 3%.
Mhm.
So the investors are loving those returns. I mean, we're seeing, insurance companies, REITs, family offices, private wealthy individuals.
Mhm.
We've had some sheiks from the Middle East,
Wow.
yeah, that buy these loans in tranches.
Mm,
And so it's very interesting because the yields are so high, and they want to diversify their portfolio.
right.
And then obviously we control the origination, the underwriting, and the servicing, so they like that because we're with them if anything ever goes bad with the deal. We'll help
Brilliant.
them out. So
That's brilliant, man. That's, amazing. International.
well, the originations are in the United States. We haven't gotten into other countries, but the investors can be, yeah, they can be anywhere.
Yeah.
We're not perfect. I'll tell you that. We make a lot of mistakes, but we care when we put in the effort.
It's the biggest thing that matters. We have a lot of first-time listeners and also folks that are first-time investors. What do you say to somebody who's, you know, scared, I guess, or they're intimidated about what's going on? They need some
Yeah,
reality.
yeah. I mean, I think if you're a first time investor, watching podcasts such as yours, getting educated,
Thank
understanding
you.
what you're doing, teaming, go to these RIA networks, get educated, and make sure that you really understand what you're getting involved with, and then ultimately, put your toe in the water. You have to learn. You got to get experience. I wouldn't do anything where you bet your house or anything crazy. But if you have, let's say you can put, if you have 10,000 to invest, then do 10,000. But don't take a mortgage on your home to do a deal. I was watching this the other night. I don't know if you watched the game on Saturday with Jacksonville.
It was awesome.
Yeah, but you see there was a guy when they were losing 27-0, bet $1 million that Jacksonville was going to lose.
Oh,
The
wow.
payout was only 14 grand. Yeah. It's a true story. It's real. So he
That's
lost everything.
wow.
It's actually, you can look it up. It's in the Vegas, one of the Vegas sports books, the Caesars, and they posted it. It was just unbelievable. So you don't want to do that,
Right.
and make these crazy bets unless you have the money to do it and you don't care. Probably that guy had the money. I don't know.
Yeah,
But
hopefully.
yeah, but don't do something crazy in the beginning, and just surrender to it. Like I always say, surrender to the craft, become a student, and then network and shadow and mentor under the right people.
Right.
And in time you'll get it.
Love that, love that. Thank you. We're coming to time. How does somebody get a hold of you?
Yeah, if anyone ever needs any help with, we have, like I said, we're a nationwide lender. You can call or text our office, 832-431-6331, or you can go to our website, official Angelo Christian. We're all social media, Angelo Christian Mortgage on YouTube, official Angelo Christian on Instagram. You can DM us there, text us, whatever. And then we also have a university. If anyone wants to become a student and learn about Angelo Christian Lending, you can go to our university, realestatuniversityonline.com, and that's also on our YouTube handle too. So
Amazing. Awesome ways to get in touch. I encourage you to check out the show notes too, everything to get a hold of Angelo, follow. But really great. Thank you so
yeah,
much.
yeah, very nice to meet you, man. Thank you so much for letting me be on the show. Best of luck.
Definitely, definitely. All the best to you, and we'll have you back on one day.
Awesome, sounds good.
All right. It's Real Estate Investor MBA, Tejas Gosai. We just had Angelo Christian, reimba.com. Cheers.
Thank you.